What's up, everyone? Welcome back to the Easily Profit YouTube channel. I'm Jay. Today's video is sponsored by the Great Courses Plus. Now, in today's video, really what I want to go over is going to be a little bit more advanced techniques going into entries and exits and how I take them. So we already know a lot of the background information. If you've seen a lot of my previous videos, I know you should know by now how to scan, how to look for the stocks, how to set up your watch list from there. Know what setups I like to look for. And in today's video, really, I have live examples and I want to explain really my psychology and process behind taking my entries and exits, what to look for, where to aim for your entries, where to aim for your exits, and how to exit as well. So this is going to give you a very, very good strategy to go forth in, especially if you want to apply it to the markets and do this, and that. So it's really whatever. But at the end of the day, I really want to set you guys up to see you guys really make some good gains in the market. 2019 is really pretty hot right now. So traditionally, especially if you look at my older videos, you guys should know how to scan, but I'll briefly go over that. You want to use the scan tab on Thinkorswim, go to Stock Hacker, set your price between 50 cents and $10 per share, set your volume from a minimum of 200,000 all the way to a maximum of 200 million. To create your watch list from there, I look at the top gainers all the way down to the biggest losers. I take the top gainers on the day and usually look at the top 4 stocks that are above 1 million volume. So these top 4 stocks here will technically be on my watch list, and then I'll watch those stocks for the setup. Now, once you find a stock that is setting up the way that you want to, my setup traditionally is always going to be intraday breakout. So I look for a set high on the stock and I look for it to break that set high. Those highs can be pre-market highs, for example, like the stock breaking above a pre-market high. That can be a good entry point and a good buy trigger for me. It can be a intraday high that has been set up like this stock here, where it sets a high here, it pulls back and it looks to break above. So multiple different points will work. You just have to know where to aim for your entries and exits and how to set that full deal up. So whenever I look to enter into these trades here, so a trade like TRVN that I played today, what I really want to see on a stock like this is initially I like to look for the intraday high, and then that initial spike in price, and then that pullback. So that initial spike in price, you can see here, the stock had good pre-market activity, shows up on the watch list, and then from there, the stock really starts to take off out of the gate. Once it hits some form of resistance where people start to sell, people are looking to dump a lot of shares here. Usually at that point, you get to see that on the chart, and I can see that as a defined level of resistance. Now, I'm looking for the next leg up, the next leg of the race, for example. So that's really where I'm going to base my entry off of. So whenever I'm looking to take entries are either going to fall into 2 points. So we know the traditional entry, and that's commonly used, is anticipating moves, and the secondary part, which is always going to be confirming moves. Now, each is going to have its pros and cons, and what I see here, especially what I see a lot of times what more people do is going to be anticipating moves. So when you anticipate a move, you're just going to be buying in earlier to a potential setup. So you're looking for the stock to break above that level of resistance and break out and run. So you're going to be buying earlier, and kind of the logic behind that is rather than selling for a higher price, if you buy earlier, you make more profit on that position. So it kind of makes sense at the end of the day. The problem with anticipation is you're usually going to be playing a stock that isn't breaking out. You're going to be playing a stock that has the potential to break out. So in turn, there's going to be a lot of negative effects to that. Usually you're going to have a lower amount of volume. You can really see stocks usually stay at a lower volume point during that anticipation move, or a move that is looking to break above the level of resistance. As well as with anticipation, it's easy and very, very easy to get faked out of positions here. So especially if you look at this stock, for example, a little bit later in the day, so you can see that this stock sets a high today somewhere around $1 per share. It pulls back and it starts to come back up again. So some people would look to buy into this position here, looking to anticipate that high of the day break, which never happens, and the stock pulls back. So you kind of don't want to get suckered into buying too early into trades with anticipation here. So what I like to do more often is going to be the confirmation trade. So I wait for the stock to break out above that level of resistance. I don't want to play that first candle that breaks above. I usually wait for either the second or third candle to set up. And I want to see a solid candle that can set up above the breakout point, not something that has crossed over, because a lot of times the stock can cross over and pull back very, very quickly and you get faked out. So I want to see a solid hold above that level of resistance. Now, the confirmation, the pros to that is always going to have a higher success rate on the trades as well. But always the downside of that is, can you get in early enough where you're not buying too far away from that that previous broken resistance. You're usually going to have a high amount of volume here. You can see once the stock starts to really take off, the volume gets very, very high. So in turn, there's a lot of other people looking to enter into the trade, which isn't, you're not always going to be guaranteed to get an entry at a good price. Now, as well, sometimes that initial break can push the price so high that, imagine if this candle goes way up here, which I've seen happen a lot. If this candle goes way up here and the next candle starts to form, are you willing to buy this stock way up here, way far away from that level of resistance that was broken? Me, I wouldn't do that. Even though technically it's a confirmation, I'm not willing to take those odds, because worst case scenario, if the stock wants to go against me, it's coming all the way back down to this nearest level of support. So you may be down 10 or 15% before you look to take action. Well, in this case, you'll be down 18%. So you can kind of see that you really want to finesse it in a certain way where you're not looking to buy the stock way too far away from that level of resistance. I like to keep this as a good reference point. Now, if you enter into the trade, let's say I enter into this trade on that third candle of the confirmation somewhere around 0.83. Where should I look to set my stop losses? Traditionally, everybody, whenever they enter, they want to set stop losses right after. They want to set sell targets right after. That's cool, but with me, I set my stop losses right after, because I'm looking for worst case scenario before I look for a profit. So my worst case scenario plan is always going to have the nearest level of support to be my first line of defense. So the nearest level of support on the stock is somewhere around 0.78. You can see the stock pull back and bounce off of that point. That's the nearest level of support. Now, from my entry price to the nearest level of support is always going to be the risk. So I'm risking 6.3% on this stock. That's very, very risky. And you can see that the further you buy away, the more risk technically you're going to have. Am I willing to take those odds on that stock? No. So what I like to do is, even though I still want to go through with this trade, you can have a shorter, you can aim for a smaller amount of risk. So let's say I move my risk down to around 4%. I'll look at that to put my stop loss here. And then if I'm risking 4%, I rather aim for double that on the top side. So if I aim for double of that on the top side, I want to aim for 8% in profit, which is going to be my sell target. So I'll look to sell somewhere around like 0.90, 0.91, for example, somewhere in that area. Now, you don't always have to sell with your full positions. You can always buy a full position of 1,000 shares technically. And let's say you want to sell 500 shares at your initial 8% target, which is going to be your 2-to-1 ratio target. And you want to hold the other half to see how far it can go. You can always do that. But really the main theory and logic behind it is always going to be this. So I like to play the confirmations, especially look at the nearest level of support as your first line of defense. If it's too far away, I'm not willing to risk 6%. So sometimes I want to cut that in half, maybe 3.5%, 4%. Look at that as your risk level, aim for double of that on the top side for your profit. And then from there, take the trade. And if you want, you can always exit with half positions, selling half your shares first at your intended target and letting the other half ride to see how far it can go. Worst case scenario is that other half comes back down to your entry point and you sell and you still make a profit because you sold that first half for a profit. So, that's really my logic behind the whole deal. Now, let's get into the live trades and let me show you really in action how I do this. First trade here we have is BIOC, BIOC. That stock has been running for multiple days. It's in a huge downtrend on daily. So I know this is just purely going to be a day trade. So I'm looking for that break above that 230 level, looking for that confirmation candle that I see now. So from there, now I'm looking to enter into that trade. I entered at 234. The quickest way to enter, especially on Thinkorswim, is always to right click on the price, hit buy, it automatically sets a limit order and it goes through very, very quickly. So you can always do that. So from here, I'm looking just to hold the trade. I know I'm going to be aiming somewhere around the 2.7, 2.8 level, especially because that's going to be somewhere around double the risk that I'm looking at on this trade. Now, commonly, whenever you look to enter into some of these trades here, they're not always are just going to go to the moon right after you enter. Even though my P&L is up somewhere around $700, I'm looking for a little bit more on top. You don't want to be too greedy. So if the stock really starts to pull back very, very harshly, you kind of want to get out and protect yourself. But just know to work between the lines of support and resistance. So if the stock starts to get a little bit of resistance here and there, you can see as the stock is, as we speed it up now, as I'm going forward with the stock, it may hit some resistance. It's starting to hit resistance at around 2.5. It's kind of trading sideways a little bit. I'm not going to panic whenever I see a red candle and look to sell just to secure profits, because a lot of times right across the corner is a nice run that can set up. Fresh breakouts aren't going, with fresh breakouts, you're never guaranteed just a continuous run forever. There's going to be pullbacks and and the stock is going to ebb and flow. You just have to work between those support levels and the resistance levels like that. So I'm still holding the trade. I'm still green, but in turn, I know this isn't the big run that the stock can really do. So you especially see later on as you go into the future here, you can see that the stock is kind of downtrending a little bit, but as well, sometimes that's going to happen. These stocks will pull back. You have to wait on those. It's not going to be a guaranteed run right after you buy. And then once the stock starts to look to retest that high today that it just set, now it's going to be breaking above that, and now it's going to continue to start running from there. So you just have to, a lot of times, a good lesson from this trade here is just to wait on your gains. You don't always have to sell at the first spike or look to sell whenever the stock just starts to pull back, because a lot of times they can just start to take off again once they break through those high of the days. And you can see here, I'm really in profit. I look to sell somewhere around 2.75. So I'll take my first exit there with a half position. So I like to sell half positions into very, very quick runs. So if I buy into a stock and it runs very, very quickly, I can sell a half position into that and let the other half position hold. So if it really wants to run, I can just up my average of my selling by selling another half at an even higher price. Now, sometimes with half positions, it can go really in your favor, like what's happening now. Like I'm almost up $4,000 on the day. Or sometimes what you can see is if you keep on holding your half position sometimes too far and you don't get out while you're really ahead, it can really start to pull back on you, and you have to sell really within the scraps. Now, it's a good scenario that I'm already up a good amount. So even if the stock pulls back, I'm not going to really take that big of a hit. So I'd rather sell, especially as the stock is looking to pull back. I mean, I exited the trade with somewhere around a $3,600 profit for that stock with 6,000 shares, which my position was around 18,000. So that's not too bad. Now, getting into MBOT, that stock ran for multiple days previously. And usually I'm catching the stock around the third day that it's running. And as I say, again, you want to work between support levels and resistance levels. Now, when I take my entry here, I'm noticing that $5 per share level of resistance. I'm not looking to buy at that point, because if it wants to pull back, I'm definitely going to start my position off red. So I want to enter a little bit below that $5 per share psychological point. And I think I tagged my entry somewhere at 494. So I grab an entry at around 494, which is above that level of resistance. Now, I kind of broke my rule when I usually say I want to look for that confirmation candle. But whenever these stocks run so quickly, sometimes that first confirmation candle can push up so far that, for example, if I want to enter on the next candle around, I would end up having to enter at like 5.1, 5.2. And I'm not looking to do that. I kind of want to enter sometimes a little bit early. You're like anticipating that level of resistance, which is $5 per share, even though the intraday resistance is somewhere in the around the 490 level. So from here, I'm holding my entry into this trade, and I'm just playing the stock as it goes forth. So as I said again, always you're not going to have pure runs right after you buy. Sometimes you're going to have to wait, because fresh breakouts are very, very volatile territory. Now you can see here I'm aiming for my my 2-to-1 ratio target at around 5.4. And from there, I sell my half position again. So you saw I sold that half position with 600 shares at that point, at that price point. Now from here, I was looking to sell the other half at around $6 per share. Now that doesn't always kind of go as planned, like the previous trade before. Sometimes with those half positions, if you aim too high, even though if they execute at that high level, it's going to up your average. You're selling, going to make more percentage on the day. If you aim too far, it's just as worse as just aiming very, very high with just a normal sell target. So what I usually see is kind of my rule on the half position side is, if I'm holding a half position, I don't want that last half to hold past my entry point. So if I'm holding a half position and my P&L open is negative and my P&L day is still green, that means I'm holding it too far. So before that happens, before that deduces down even further, you see I sold that other half position, exit the trade for a 450 P&L. That's all good. Even though for the rest of the day the stock really ran and I could have made thousands or whatever, you're not always going to be perfectly accurate, but take the green and go home. So that's really how it is. So I hope you guys enjoyed. I hope you guys especially learned something today. I mean, the free content, if you guys love this type of content here, just slap a like on the video, subscribe. I'm coming out with more videos. So Hope you guys enjoy. What's up, everyone? Welcome back to the Eat Sleep Profit YouTube channel. And today's video is sponsored by the Great Courses Plus. They're a subscription-based on-demand video learning service with top-notch lectures and courses from top professors from the Ivy League and other great universities globally, and experts from places like the National Geographic and the Smithsonian. Now, they give you unlimited access to a huge library of over 11,000 video lectures about anything that interests you, from science to math, history, literature, and even finance and day trading. Personally, I've been loving Connell Fallenkamp's Understanding Investments. This is a very, very in-depth course, just learning about money, stocks, bonds, mutual funds, ETFs, especially PE ratios. A lot of different in-depth concepts are explained in very, very good detail. And for example, it's from a college professor. So this is a very, very in-depth course. So the Great Courses Plus is giving all the viewers a free trial. So especially if you want to learn about finance or just any other thing, how to cook, how to play chess, how to become a better photographer, you can learn all that on thegreatcoursesplus.com. You can use my link, greatcoursesplus.com/eat-sleep-profit to sign up for your free trial. Show your support by subscribing to the Great Courses Plus. They are a very, very good platform. They have my seal of approval. Click on the link in the description below to start your free trial today.